Hey traders, have you ever wondered how a hot economy might actually be bad for your portfolio? I know it's kind of difficult to wrap our mind around that, but today we're going to dive into that exact topic. And there's a big spoiler alert here. It's not as straightforward as you would think, because sometimes economic growth is good for the market, and other times it's kind of negative for the market, especially when it's driving inflation higher and higher and higher. Because we have to remember that a couple of years ago we had 8% inflation. This year it's sitting around 3%. Well, it didn't mean that the inflation went away and went back to 3% per se. What it meant is that 3% adds to last year's inflation. And I don't know about you, and Anil, I don't know about you, but I'm feeling the pinch of inflation. Are you, Anil?
Yes, to an extent.
To an extent.
To an extent. It's kind of localized in some areas.
And so before we take a deep dive on that, let's take a look and see what is happening. What's inflation doing to the Russell? Why do I hone in on the Russell? The Russell, I guess I want to share that, don't I? Ha.
Yeah, are we? Yeah, okay.
There we go. And so, go ahead.
Are other people checked in? I don't see anything.
Okay. Yeah, if you guys are online, just let us know you're out there. I appreciate it. And where you're coming in from. And so, okay, the Russell is basically breaking back down. Back on May 15th, the Russell put in a hanging man that is a bearish reversal signal, and we are basically have not recovered from that as of yet. Hey, Charlie. Hey, Paul. Good to see you guys. And so what does that mean for us? Well, one, we fell down here to the 50. Let me change the color of my ink. I was doing some other drawing earlier. There you go. We fell down to the 50. Then we had a rally attempt. The rally attempt fell short of the past highs, and that's a telltale sign that, whoops, watch out, because we may be going lower. And sure enough, that's exactly what happened. We went lower, and today, after the report, price action was really trying to work on a rally, and now we've gapped down, and it looks like we may be going on down to retest where? Hold on just a second. If you look over here to your left, there's a range here, and that's the gap up. And isn't it interesting how the gap up is this gap up here is acting as a level of support, and that's where prices are holding. Break below that, watch out below. We could run all the way back down to the 200-day moving average, which is currently at about 191 or so. Let me move that up a little bit, and we'll take a look at that. So there we go. And so our current 200-day moving average is sitting up about 191.58. Notice, weekly wise, the price action is breaking below the 8-week moving average, and that oftentimes indicates that if we close where we're at right now, we're probably going to go down and visit back into this Fibonacci magic fib box here, where we bounced that from before. So that's what we got going on the Russell. We'll take a look in just a few minutes at what's happening with the other indexes. But before we do that, let's go ahead and jump on over to the hot economy. So I'm Dennis Wilborn. I'm here as your basically guide to financial and lifestyle freedom through swing trading. Joining me is Anil Parikh. He is the mastermind behind the triple screen stock picking system and also the organizer for the Delaware IBD meetup group. Good morning, Anil.
Good morning. Glad to be here.
So, Anil, how are you? Okay, I know you just trade your system, which is excellent. You're not necessarily swayed by economic news per se, but with the economy not wanting to cool down, hence potentially leading to higher inflation and prolonged, um, there we go, prolonged, um, not lowering of interest rates. How are you seeing things work out?
I think you just said it. As you said, I'm trading my system, and right now I have tightened up my system quite a bit when I'm following Mark Minervini's trend criteria and my own tight market Smith screen and combining them. Whatever shows up is the right thing to buy. I would buy them, and if not, stay put.
I agree. What percentage are you invested right now?
About 50.
About 50. This past week, we had a lot of triggers that we got into. And actually, I went up to 125% invested. At the same time, though, my profit targets and some of my trailing stops were hit today and actually dropped down to where I'm about 95% invested right now. And that's okay because Investor Business Daily, of course, says that they're looking at exposure rate of somewhere between 80 to 100%. And so, again, I trust my system. I trust my fire and forget orders to get me in and out of trades. And that was one of the cool things about when I was on vacation with the grandkids over on the Big Island in the middle of the volcano. I didn't have to worry about my trading because my system was taking care of that. So, as we say, we're all high on inflation, in this inflation zone together. And we're going to share with you what we're doing to escape the claws that are trying to get into our wallets and steal our money. But hold on. I have something really exciting towards the end. You're gonna not want to miss this. Not only do we have stocks to talk about, but I have a rare video to show you of my audition for America Has Talent. So you really need to hold on. I know it has nothing to do with trading, but it's really a good and funny video. So let's go ahead and jump over to the rest of the. You didn't know I was going to audition for America Has Talent, did you, Anil?
No, this is news to me.
And it could be really scary too. So let's take a look at first starting with the S&P. Okay, etch this in your mind of what the small caps are doing, and then compare it to what is going on with the NASDAQ, the S&P. Very interested on the S&P. We had a hanging man yesterday after we had a really nice explosion off of the 34-day moving average earlier in the week. We went on up, broke through the 8-day moving average, bounced off the 8-week moving average. However, remember that uptrend channel, price actions have gotten really close to that. So now I'm stacked as of right now with two reversal signals. If prices close approximately where they are right now on the S&P, I will have a shooting star that has followed up a hanging man. What else do we have that we want to be paying attention to is new highs here. However, momentum showing negative divergence on the TSI on the daily chart and negative divergence over here on the weekly chart, pushing things down. So that's where we'll be taking a look at that. Notice how the RSI on the weekly chart really struggling at the upper level. It's showing negative divergence also. And what else we have? That's about it on the S&P. What do I look at happening? Well, one, Let's see if the 8-day moving average holds, if it does drop down next week. But let's also, it could get down into the bottom of the Keltner channel and bounce off either the 34 or the 8-day moving average. Next up is, let's see if I have it here. I don't want the TQQ, I want the Qs. Okay, similar type situation. No bearish candlestick yesterday. However, today we are getting a shooting star, recognizing that the shooting star, we're at a level of resistance after a breakout. So I wouldn't be surprised to see it go ahead and give us a pullback. It's also demonstrating the personality of the momentum failing to reach a new high as price action does meet a new high. And we'll see if this basically does a pullback and how deep the pullback can be. Note that the past 2 weeks, price actions have fallen to the 8-week moving average, and the 8-week moving average next week, I will look at it repeating itself on the NASDAQ, and it will be sitting about 49.75. On the Autopilot Trading Premium members, we, of course, are long a position on TQQQ on this, and TQQQ hit our 10% profit target, and now we're basically that particular position will never lose simply because now we have a 10% trailing stop that kicks in, and so it will continue to be profitable. So that's, Neil, that's what I've got on the indexes. What's your thoughts? What's your triple screen telling us?
Triple screen as far as S&P 500, I still have the buy signal on daily. I do see a weakness in MACD on around May, the end of May, but then it kicked back up. So currently it looks okay.
Okay.
The weakness is of course on for a long time. So
are you personally trading the leverage ETFs on
yes,
the Russell, or not the Russell, but the like TQQ or
yes, I'm in TQQ right now.
Okay, roger that. And so excellent. So, hey guys, every week we cover how the indexes are moving up, plus the top stock picks, and how they can affect your trading. Anil and I share our techniques of what we're doing. So if you want to dig into the strategies of how to successfully trade leverage ETFs and top stocks, check this out. And this being, you'll love this book, Trade Your Way to Freedom, Retire Early, More Money, and Less Fear. It's packed with the strategies I use personally to help, and it's meant to help you navigate the market condition. I'll put a link down in the description when we send this out, and it'll be there in the description on YouTube. Oh, and it's also available as an audiobook now on Amazon. So let's take a look at what the heck the stocks are doing. Here's a little bit of where we're doing. I'm had a little bit of a nice acceleration this week to get back on schedule. Again, June, we're only in the first week of June, so things are looking well. We'll see where earlier in the week, I was actually all the way up to the line, had about 19%. Now I'm back down to about 16%, and that's fine because I am ahead of schedule. And the other thing is ahead of the other indexes, which I love that on a regular basis. So with that, let's go ahead and jump over. And what about those stocks that we want to be taking a look at? First of all, let me get the chart up. And I'm almost there, Anil. There we go. So Anil has got some really great picks today. We're going to basically cover his first pick, which is Pinterest. Pinterest is one of my wife's favorite companies. She likes to get for design ideas and all that kind of stuff. So tell me what's going on with Pinterest here.
Very simply, it is very strong on my system. It meets Mark Minervini's uptrend criteria, and it meets one of my tightest screen on MarketSmith.
Okay.
Earnings are behind us, and so and it also bounced back from the 20-day line recently. So I own it and hanging on to it.
Yeah, I really love this. This is really classic. We had the breakout here. Show it to everybody. We had the breakout, or when it did its breakout, and then it ran up a little ways, but then did this nice controlled pullback to retest the breakout, and now it's taken back off. And you notice with a little bit of extra volume. So you're already in it. Are you adding to your position?
Not adding yet. I'm in it. I'll add maybe after a little bit of pullback.
Okay. So, and remember, if you're wondering, yes, we are going to cover what the heck to do with the 10-for-1 split on NVDA. And I'll give you a little hint. I'm going to tell you, don't buy it right now. And I'll tell you why here shortly. So my first pick is a Bitcoin miner. And I have been watching this stock for quite some time. And get it to type in there. And it's called Clean Spark. Clean Spark is operating between $15.40 and up to $20. That, be aware of, that is a really nice range. Now it's selling a lot. It's a crazy stock, but from that low there up to that high is about 30%. So if you capture part of that, that's awesome. It's approaching the level of support. And so we'll see where it bounces. Notice this is a very volatile entity. Today's range is about 13%. So if you are going to trade this, you may want to take a smaller position and wider stops, but make sure that, this is the advice from the ancient trader here is do not basically do not expose yourself more than you would expose a full position at a 5 to 6% trailing percent stop loss. And so I'll be watching this. I would like for this to basically bounce here, move back above the 8 and the 20. And so we'll watch that into the close. It very well could. I'll put an alert right there at the 50-day moving average. If it jumps above 1673 by the close today, that may give me an indication that, it might be time to buy. And so we'll be watching that. So that's CLSK. Next up. Now, a couple of weeks ago when we did our last session, Anil mentioned CrowdStrike as a stock he was following. CrowdStrike is a stock we traded last year. And Anil, from what I understand, you not only CrowdStrike, you have a story to tell about the composite man.
Yes, in a nutshell, the composite man fooled me this time. CrowdStrike was extremely strong on my charts and MarketSmith chart, but the earnings were coming up, and I was not sure. Usually, I never buy when earning is so close, but again, my analysis showed that it was strong. But still, to be cautious, I took half a position in there.
Okay.
Dual stops on it at 5% and 7%. And sure enough, the composite man came in, zapped me out on both those stops, and earnings came in, and of course it jumped, and it went up there without me.
So you missed this.
So I missed that.
So
Because of the sharp drop. So lessons learned is be aware at the time of earning, as usual.
So how are you, like I know, I'm assuming that CrowdStrike isn't off your list. So how
No,
will you trade it now?
no, I'll get back into it probably later on today or next week if it's because it's still within base and its fundamentals are strong. Earnings came out very strong. So it's a good stock to get back into.
Excellent. And so, and for those, basically, I like CrowdStrike. And for those who basically follow the autopilot trading system, keep your eyeball on CrowdStrike on a bounce back down around the 8-week moving average. That may give you a lower risk entry level to get in, and that's sitting right about 327.78. Which just happens to coincide with approximately where the 50-day moving average will be next week. And so, okay, drum roll, please. Let's take a look at our buddy NVDA. Should you trade NVDA? As you're aware, NVDA splits on Monday. It splits, and what time does it split on Monday? Is it after hours? Is it going to tell us? It just says on 6:10. So I don't know if it's Neil. Do you think it's going to be split first thing in the morning?
I don't really know. I don't know.
Okay, and so what I'll be waiting on happening, basically from the time it announced its split, just slightly after earnings, we had this huge move up. There is a tendency and a high probability, now it doesn't have to happen every time, but there's a high probability that after the split, 10 for 1, in other words, it's going to be worth about $120 per share come Monday, stocks will go into what's called a post-split depression. The post-split depression will be where people who bought on earnings and or after earnings and rode it from this level here up to this level here, about a 20+% gain, they're going to be game to take their profits off the table. How far will it fall? Don't know, but I'll be watching for it to get back and retrace probably to around the 8-week moving average. And of course, that's going to be, divide that by 10, it's going to be about $102. So we'll see what happens on Monday, and mark that on your calendar. So that's what to expect with NVDA. Then once it recovers from its post-split depression, I would look at loading up on NVDA or its 2-time leverage ETF, NVDL. That's November Delta. Yeah, November Delta Victor Lima. Anyway. Okay, so the split's going to, Curtis just basically wrote in, split's going to take at the close June 7th, which is today, guys. First day of split trading is on June 10th. Thanks, Curtis. I want to welcome everybody who's coming in. Hey, Mike Lamoth, how you doing? It's always a pleasure to have you on board. Charlie, Paul. And so anyway, are you in NVDA right now, Anil?
No, I'm not.
Okay. So what's your thoughts about that strategy of waiting to see what happens and waiting for the post-split depression to take place?
No, that makes a lot of sense because, as you said, people who are in it have a nice gain right now.
Exactly.
And they're going to take profits.
Exactly. And so, okay, folks, let's go ahead and I want to basically, Ed says successful trading. What is your major takeaway from today? I'll ask you, what is your major takeaway from today? And with a hot economy presents a unique opportunity and challenges, but I've always found applying applying a concept that you trade the chart that's in front of you, and you don't deviate from your trading plan. So, as I said, if you found today's, oh, wait a second, I forgot something, Anil. I promised everybody we were going to show my audition for, and I hope you can hear it. And here it is, the Singing Engineers. I was at the swap meet, and I hope you can hear it. And I'm going to crank it up. I was at the swap meet around Aloha Stadium. I ran into Charles, didn't know Charles from Adam, but he's a great electrical engineer. And we got to chatting, and he's there representing a company selling ukuleles now. And we gave this is our audition for America's Got Talent. You ready? Can you hear that? All night, got into our boat. I wanna go home. I wanna go home. Yeah, yeah, I wanna go home. I wanna go home. I wanna go home. All right. Yeah. So that's what happens when two, ancient engineers meet at the swap meet and just give it a go. So, and remember, you're not going to get anything like that on any other YouTube channel talking about the stock market. So if you did find today's session valuable, hit the subscribe button and share this with fellow traders. And, don't forget, grab a copy of the book, Trade Your Way to Freedom. So, Anil, this is another great session. Thank you so much.
Thank you. Enjoyed it.
Have an absolute fantastic week, and we will be talking to you shortly. And so aloha and God bless everybody. We'll see you. Hang on.